if you've got any questions you'd like answered, give us a call on 1300 30 34 35 or drop us an email at yourmoney@skynews.com.au. We're going to go straight into Coolidge. Welcome to the programme, John.
Oh, good day, fellas. Look, we've bought a stock ASG, which is ASZ on the ticker code.
Yep.
We bought in at 80 cents, and just today, the idea we bought in for was that on the 20th of September they pay a fully franked dividend, which in years gone by has been about the 8% sort of mark. And we're sort of wondering whether to hold it on to then or whether to take our gains now and get out of the stock.
Yeah, great question there. I mean, it's had a nice run. What would you be doing in this scenario?
Chris, what I'll definitely be this company. I mean, the IT, I guess, industry consulting business. Their dividend yield was very attractive. Obviously, why Gary got into it. It's a company that at this stage, fundamentally, not much debt, 22% debt to equity ratio. In terms of their return on equity, they've been delivering 13% for the past 3 years. The company is fundamentally sound. Probably not on my highest, I guess, the top picks that I have. But if they've made a good profit out of it, it might be time to actually exit and get into another opportunity. Okay,
fair enough. And I mean, this is obviously dividend plays, not the fundamentals, really not really up your alley, but
well, I do like the. You're quite right, but I do like the dividend plays, and particularly if you've got a self-managed super fund, it's really fantastic things. 85 cents, which is it's virtually closed at there today, or was it 86 cents today? Yeah. It's at 85 cents now, so you've got a choice, John. You either sort of say to yourself, look, if it gets down to, I don't know, 82 cents or even 80, I know you've got a profit at the moment because you bought it at 80 cents, so it depends on your trading plan. I always think it's good to know what your plan is before you go into the trade, so that way you don't have to really make a decision, because at this stage you're trying to make a decision and you're worried about whether it's going to be right or wrong. So if you hang on to whether with the dividend, to me, I'd be doing that if my long-term plan was to hold it for a dividend play and not worry about the price at all. If you're worried about the price, well, then that's a different. You make a different decision.
Yeah, well, that's what people always get into. You know, Telstra, I guess, for they were never looking for the capital growth, and they've been quite nicely rewarded, I suppose.
Absolutely,
and
yeah.
We're going to go to an email. We've got an email from Steve. And Steve writes, could I please have your opinion on Boom Logistics? The ticker code there is BOL, a mining services company specialising in cranes. They have won a contract at a mine in South Australia. I think it's called the Roxy Downs. OK, well, Boom Logistics, yeah, I was talking to this with a couple of guys the other day. It's had a remarkable rally. It's up 40% year to date. These guys specialise in, as Steve writes, in the mining space. They provide, cranes and other sort of, logistical apparatus for these businesses. They've just come out with their earnings. Their earnings, if you can look at the chart, you can see a massive spike up, and that's because their earnings were spectacular. I mean, I think last year they came out with net loss of 37 million. This time around they came out with a profit of 19.7. So they've swung around from a massive net loss to a huge profit gain. Their revenue on the top line was remarkable as well, up 4.1%. But you're looking at a company here that came out with EBIT of around 35 million. They're saying that the full year numbers for next year are 47 to 50 million, and they're saying regardless of what everyone throws at us from a macro perspective, we will still be a profitable company. Now, the market loves guidance. We've seen so many of these different companies who are coming out with earnings at the moment. A lot of them are hesitant to give guidance on the forward look, and you can totally understand that. I mean, Europe, to me, is getting slightly more rosy. I think Spain will seek assistance from the ECB and the FSF as well, and they will look to buy bonds. I don't think Italy will. US looks like it's recovering slightly, but there's still a lot of macro fears out there. Anyone who says there isn't, really doesn't look at the newspapers enough. But to come out and give categoric guidance in this market is very positive. The only other, there's a few who have as well. Most of it being from a sort of narrative perspective. I mean, I think Domino's Pizza came out with some very firm narrative, and there's been some other ones. But yeah, this to me, I mean, I'll have a look at the technicals. This had a really strong run the other day. They're saying really aggressive, strong, positive narrative, making the right earnings, beating the market's expectations. Darryl, I'll start with you. You know, what are the charts saying for you here?
Yeah, well, when it spiked up, it reached another high. So we've almost got sort of triple highs. And so one way of looking at the analysis is that there is that prospect of the market coming off those highs. However, if it does go through those highs, so we're talking about 33 cents.
Yeah.
Then that's a buy.
Yeah. No, I was saying that was just big pivot rejection. I mean, we're just getting there now. If we get a close above that level, for me, you know, there's uncharted territory up to about 45 cents, to be honest.
Yes.
So that's what I'll be looking. Michael, got anything to add?
I've looked at Boom Logistics in detail. I've had a look at the balance sheets, and within the past 4 years, they've actually reduced down the debt from 100% debt to equity ratio to about, at this stage, around the 20% mark. In terms of the business itself, it's quite solid. It's servicing the mining sector, providing cranes. There's still a lot of money being put into the mining sector itself. And like you mentioned, look, I guess the macroeconomics at this stage within Europe or the US itself might not be as strong, especially with Europe coming out with the UK figures that came out for the third quarter. UK actually has had their growth declined by 0.7%. That's the third executive quarter. So they're actually in a recession now. We've had the Olympics come on, and a lot of investors have sort of lost track of the major issues within Europe. But UK is in a recession. Italy's growth rates were down 2.7%. Spain's down 1.6%. But there's still demand for companies like this that are providing services to the mining sector. There's a lot of money being put in. Yep. And a company like this that's fundamentally sound, it's got great cash flow, it's reduced its debt, and it's got a high return on equity. So I see it as an opportunity to look into.
Yeah, well, the volume is falling at the moment, so maybe wait for a pullback. But if I get a close above that 32 mark, then I'll be looking there. But we are going to have to leave it for a moment while we do take a short break. If you'd like to speak to our expert panel, give us a call on 1300 30 34 35 or drop us an email at yourmoney@skynews.com.au.